that video about ADA. So here on the ADA chart, I'm just tracking here the daily chart right now. We will take a look at the shorter time frame in a minute, just to explain again that at the moment, as long as we're holding here on the daily chart above these red lines, first one being the 58 cent level, 58.5 cents, and the lower one, the 51 cent level, as long as we're holding above these, a direct move to the upside is possible. There are various patterns that allow for a move to the upside. The problem is that what we see here is really just, it's starting to look like a triangle, which is why on the smaller time frame, I've actually added a micro structure for this triangle that helps us to understand, also the key levels and how far we are in this triangle. Definitely something to track. So just be aware that this could take a little bit longer sideways as a triangle. For example, before we go to a smaller time frame, triangle pattern would be A wave down, B wave up, C wave down. We could be in the T wave and another E wave, and then we break out to the upside. But that could take some more time actually. But again, it will be invalidated below 51 cents. That's why we are tracking these key levels here. What would happen if it gets invalidated? What if we break to the downside? Well, in that case then, we will have to pay attention to the yellow box below, between 29 cents and 36 cents. This will be the next main support zone to watch, because then we will likely break back, or pull back to the August lows of last year, around 25, 30 cents or so. This is something to be very much aware of. Probably even the same range, 30, 35. So, but anyway, it's too early to really define a target. This is still a support zone, which is still relevant in case the price cannot hold, especially the 51 cent level. It's just important to understand that the potential for that risk, Now, to the upside then, the market could continue to move higher, but as I said, it might take a little while before the bulls turn up, because this triangle could extend a little bit. If it is a triangle, there is a more direct route higher, but even that is likely going to be choppy. That's the diagonal pattern I'm showing here. Now, and then it's important to understand, once we finally break to the upside, for me, there's a high likelihood that this is going to be the last high before a substantial correction occurs. We talked about that many times before. Looking here at the smaller time frame, you can see the triangle pattern in more detail. This is here just the 4-hour time frame. And as I explained to you, the triangle consists of an A wave, done, a B wave, done, a C wave, maybe done. Wouldn't be surprised if it extends a little lower. As long as it's holding the 51 cent level, that's valid. And then a D wave up and an E wave down. And then we could go up, because the opposite side of the E wave is typically the breakout side of these triangles. So then the yellow scenario is the more directly bullish one, in which we completed waves 1 and 2 already. We're likely now in a third wave, A, B, C, but I don't really have any impulsive start of the C wave, and that is normally what I would expect in such a diagonal pattern, that the C wave is impulsive. It doesn't have to be, but yeah, this is not clearly preferred because of the lack of impulsive price action in the subwaves. So it looks a bit more like a triangle pattern, but I wanted to highlight here the potential for a direct breakout to the upside, but it's just not high probability until we see a little bit more evidence for that. Today, the market is up slightly, but honestly, we're not doing anything meaningful here. We see this sideways consolidation that even looks like a small bearish pennant. So that's why I've highlighted here, look, if we break out to the downside, instead of above the 75.5 cent level, which is this green line, then any break below 64.5 cents will indicate that at least the C wave of the triangle is still extending, is still unfolding, and it would just require a little bit more patience, okay? So yeah, not much more to say. I think what we need to pay attention to is that 75.5 cent level. Any break above it would indicate we are starting to target the blue zone between 88.5 cents and $1.08. Why is that relevant? Because this is the target zone for a D wave in a triangle. Just standard targets, Fibonacci extensions, and so on. We're obviously far away from that at the moment, but the market, if it starts to push a little higher, could take us there. Now we have to pay attention to this zone for the start of the E-wave down, but let's first see if the price can break out of this narrow range. Might only be after the weekend, to be honest. Yeah, that's the update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe.